Nifty charts, and today's holiday and yesterday's close was indecisive. It looks like gravestone doji, and the third day of Nifty close and third gap down as well, and it lost the 20 exponential. Oh, it still has not lost the 20 exponential moving average. It's still above that in the short term. There is a potential for that to move towards the 25k, which is the bottom of the trend of the panel channel. Right. So Banknifty on the other hand has a similar candle, small body in the C, inward hammer, which is taking a support near to the 20 exponential moving average, and third day of gap down, and this hammer has some possibility of a reversal, but things have changed after that fundamentally. But anyway, we never know. That's what the charts are showing. Along a big size hammer, inward hammer, or a hammer. Either of that. If it is the top or bottom of a trend, it could be reversed. So that's what it says. May not work always, only on confirmation does it work. Confirmation above or below the candles, high or low. So it's a cup and handle on the Banknifty, and the handle may get extended or get breached. Most likely it will get breached, or it may, you don't know. It could be that it may consolidate. Anyway, this is what the patterns in the short term are emerging. So let's try to see what support resistances can be derived out of this. So it's blue marked resistance, and red is all supports. So the first major support would be 26k, 26,000 rounding number, and after that 26,151 where we have a gap, and after that you have 26 long-term highs and downside support. First one will come in at 28,587, 20 exponential moving average, and after that you have the previous resistance zone where the breakout happened. That's it. 420, 430, 440, 25, 440, 50 would be the range for support if the exponential moving average is breached. And then for the down, the bottom of the channel is 2578, where it's a confluence of channel bottom as well as previous breakout zone, and also that surrounding number as well. So there's chance that good support can come at this place. And Banknifty, if you see the resistance on the side is very clear. There's a gap that's formed at 53,763 before that will be the first resistance, after 54,000, and then 54,465, the all-time high that was made earlier. So the resistance on the upside, it has breached the neckline of the rounding pattern and is forming a handle of the cup and handle, and seems to be taking support comfortably at the 52,800 the first support, and 52,800 if that is breached can go to 52,336. That's the previous breakout zone. And just below another support is there at 52,000, and 51,900 is the confluence of previous resistance zone support, as well as the 51,929, which is called the 50 exponential moving average support also. So those are the supports that you can see the long side. Right. That's about it. So it's an expiry. It's a truncated week, and tomorrow is an expiry. We had it yesterday, which had a Banknifty expiry, a truncated week, and tomorrow have the Nifty expiry. Let's see the levels. And the chart wise, we know where the resistance supports are there. Let's try to understand it from the open interest as well. So we have a negative PCR that's bearish in nature. It's less than 1.67. And options levels is like 25k and 26k, very wide range, so it can be very volatile. And you have a long unwinding. You have a long unwinding that is there on the futures. Interest long unwinding is actually negative. It's bearish in nature. So that's what it shows. And aggressive sellers of 15,000 last 2 days alone. SG is showing negative gap down. Momentum has dipped. Momentum has dipped to the sideways in the case of Banknifty, and it is just holding. It has slipped to the sideways in the short term. And for the case of Nifty, it is just managing there. But there is a positive reverse divergence. There could be a bounce up that can happen. There is a change polarity zone also. So there is a possibility of a bounce up as for the charts and technical charts, as well as the momentum where there is a positive reverse divergence. You see. The trend is negative. It's crossed over negative on the short-term Banknifty. Nifty still not crossed over. The trend of the short-term remains positive. But yeah, there is a chance of that crossing over in the bank as well. Operators we already discussed. So support levels if as a sellers we know that across the heavy beats and the sectoral signal side, which the short term is what we see. But mid cap and small cap showing some green in the last day after the big fall the previous day. Usually as well, right, because of the bar obviously, and VIX has spiked up instead of VIX has fallen actually instead of having spiked up on Friday. But things many bar news came up after that, so the crude oil is rising because of the bar news that came the last 2 days. And gold is also spiking at the very top, consolidating, and the US dollar also spiking up. So that's a nutshell of the story. All right, so play it safe. We have a major events happening. Big banks could come in, have tight stop losses, stay out of the game until things come down. Right. Also, there's the SEBI rule changes that also could disrupt the market. Right. That's all. Bye.